You pick up the phone. A voice you've never heard tells you he's about to change your life. He says there's a company, tiny, invisible, completely off Wall Street's radar, sitting on technology that will reshape an entire industry. He says the big players haven't caught on yet. He says if you move now, at $1 a share, you'll be calling him from a beach house in 6 months. You hesitate. He doesn't. He locks you in for 4,000 shares. You hang up feeling electric. You just made the smartest financial decision of your life. Except you didn't. That company doesn't exist. That stock is worthless. And the man on the phone, he's already moved on to the next number. You just handed your savings to a con artist operating out of a strip mall in Long Island. And the worst part? He'll spend your money on a helicopter before you even realize it's gone. This is the story of the largest penny stock fraud in American history. A system built on leverage, velocity, and manufactured asymmetry, designed to extract wealth from people exactly like you. And it worked for nearly a decade. To understand how you lose, you need to understand how the machine was built. Because this wasn't a single crime. It was a system, an engine designed to convert trust into money at industrial velocity. The man behind it was Jordan Belfort. And before he built his empire, he failed at everything else. He sold meat door to door. He went bankrupt. He enrolled in dental school and walked out on the first day. None of it mattered, because Belfort had discovered something about himself that was more valuable than any degree or product. He could sell. Not meat, not stocks. You. He could sell you to yourself. Here's the asymmetry that made everything possible. On a legitimate brokerage floor, you earn a commission of 2 to 4%, regulated, transparent, modest. But in the penny stock market, the unregulated underworld of pink sheet securities, the commission was 50%. The same sales pitch, 10 times the reward. No regulatory oversight, no disclosure requirements. Just a phone, a script, and someone who didn't know better. Belfort understood this leverage instinctively. He didn't need better stocks. He needed worse ones. Because worse stocks meant higher margins and zero accountability. In 1989, Belfort founded Stratton Oakmont. The name sounded like a century-old institution with leather-bound books and oak-paneled boardrooms. In reality, it was a flickering strip mall office with mismatched desks and zero compliance infrastructure. The name was the first lie. Everything after it was leverage. He didn't recruit analysts. He recruited hunger, bartenders, dropouts, neighborhood hustlers, people with nothing to lose and everything to prove. Then he trained them. He developed a method called straight-line persuasion, a psychological pressure system designed to guide you from hello to where do I send the check in a single, unbroken sequence. Every objection had a counter. Every hesitation had a closer. Your doubt was an engineering problem, and Belfort had built the solution. Here's the core mechanic you were never supposed to see. Step 1. Stratton acquires a massive block of cheap shares in a company, often one that barely exists outside its own press release. Step 2. The sales floor becomes a hype engine. Hundreds of brokers call thousands of people like you, and sell them certainty, not information. Certainty. Step 3. The manufactured demand drives the stock price up. Step 4. Stratton dumps its holdings at the peak. The price collapses. You're left holding a stock that's worth less than the paper it's printed on. This is a pump and dump. In textbooks, it's a case study. At Stratton Oakmont, it was every single week. And the people it targeted were not Wall Street insiders. They were you. working-class retirees, teachers with pension savings, veterans investing their life's earnings, parents who remortgaged their homes on the promise of a better future. Stratton sold them hope, wrapped it in urgency, dressed it in false certainty, and backed it with projections that were invented over lunch. The revenue from these schemes didn't sit in a bank account under Belfort's name. That would be traceable. Instead, millions were funneled offshore through a network of shell corporations. Some accounts were registered under relatives' names in the United Kingdom. Others were parked in Swiss accounts under company names that didn't correspond to anything real. At one point, cash was physically smuggled across borders, Dinesh couriers carrying envelopes taped to their bodies. Belfort called it asset protection. The Federal Bureau of Investigation called it money laundering. And this is where the asymmetry becomes structural. You, the investor, had no access to any of this information. You saw a stock price going up, you heard confidence on the phone, you trusted the system. But the system was designed from the ground up to extract your capital and make it disappear. At its peak, Stratton Oakmont employed over 1,000 brokers. It brought companies public. It moved hundreds of millions of dollars. And with every deal, the distance between you and your money grew wider. This wasn't a back alley hustle anymore. It was institutional scale fraud wearing a suit and a prestigious name. The office itself had become a symbol of the asymmetry. Champagne, narcotics, bonuses thrown across trading floors like confetti. Top performers were treated like royalty. Underperformers were humiliated and replaced within hours. The culture wasn't accidental. It was engineered. Fear and loyalty became the internal currency. If you worked there, you were either winning or you were nothing. It was a cult with a commission structure. By 1994, the architecture was starting to fracture. The Securities and Exchange Commission had flagged a growing list of suspicious filings. Investors who had bought in at $7 watched their holdings crash to 30 cents. Complaints were accumulating. Internally, some brokers began to question what they were selling. Companies with no revenue, no product, sometimes no working telephone number. Management's response was simple: close the deal or leave. But the exposure wasn't just regulatory, it was personal. Belfort's private life had become indistinguishable from the fraud. Drug use, once a perk, had become a dependency. Quaaludes slowed his speech. Cocaine accelerated it. He crashed a car while intoxicated with his daughter in the passenger seat. He insisted on sailing a yacht through a Mediterranean storm while high and had to be rescued by the Italian Navy. The vessel was destroyed. Over $2 million in valuables went with it. FBI agent Gregory Coleman had been building a case for years. He pulled Stratton's cold call scripts. He subpoenaed wire transfer records. He tracked real estate purchases that didn't match reported income. He found patterns of cash withdrawals, 50,000 at a time, laundered through casinos and art purchases. And then Belfort's own people turned. Brokers who had been caught on separate charges, others who were burned by unpaid bonuses. They wore wires. They recorded calls. They handed over files. Self-preservation outweighed loyalty, as it always does when the architecture starts to collapse. In October 1996, federal agents raided Stratton Oakmont. Phones were pulled from desks, hard drives copied, filing cabinets emptied. Someone tried to flush documents. Another walked out with a briefcase of shredded contracts. It didn't matter. The evidence was already secured. But Belfort even then couldn't stop. In 1997, while under active investigation and explicitly instructed not to move funds, he wired $2 million to Switzerland. The transaction was traced. The conversation about it had been recorded. That single transfer became the thread that unraveled everything. Belfort was facing 30 years, wire fraud, securities fraud, money laundering. The charges alone could have ended him. But he did what he had always done. He sold. This time the product was information. He cooperated. He wore a wire. He handed over the people who had followed his system, built their careers on his playbook, trusted his leadership. Over 30 employees were indicted. Some had joined Stratton straight out of secondary school. They learned everything from him, and they served more time than he did. Belfort received 22 months in a minimum security facility. No fences, no cells. The guards didn't carry weapons. He played tennis in the mornings. The court ordered $110 million in restitution to his victims. To this day, only a fraction has been paid. The rest, hidden in offshore accounts, buried in legal structures, dissolved into the same architecture that created it. Here's what you need to understand. Belfort's story didn't end in prison. It mutated. He wrote a memoir. Hollywood turned it into a blockbuster. The same man who defrauded thousands of ordinary people became a cultural icon. Audiences laughed. Critics applauded. The film grossed nearly $400 million worldwide. And then came the second act of the con. Belfort became a motivational speaker, a sales coach, a podcast host. He charges tens of thousands of dollars per appearance to teach people the same persuasion techniques he used to steal from them. He wears the name The Wolf like a title of honor, not the scar it should be. The teacher who lost her retirement didn't get a movie deal. The veteran who invested his life savings didn't get a speaking tour. The family who remortgaged their home on Stratton's promise didn't get a sequel. They got debt. They got silence. They got nothing. And this is the asymmetry that matters most. Not the financial mechanics, not the offshore accounts, the cultural one. We built a system that punishes the victims with obscurity and rewards the architect with fame. The fraud didn't just transfer wealth, it transferred narrative sovereignty. Belfort doesn't just control the money, he controls the story. 22 months became a book deal. Fraud became a film franchise. And maybe the most revealing part isn't what Belfort did. It's what you did. You watched the film. You laughed at the excess. You shared the quotes. And somewhere quietly, you didn't want him punished. You wanted to be him. That's the real scam. Not the stocks, not the phone calls. The moment you stopped seeing yourself as the victim and started seeing yourself as the wolf.